Swing trading, day trading, short-term trading, options trading and futures trading are extremely risky undertakings. They're generally not appropriate for someone with limited capital, little or no trading experience and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks and you can lose your entire investment. No trades are recommendations or advice and we cannot be sued for losses of capital. All trades for educational purposes only. Contact your broker or RIA for execution, margin and other capital requirements. Everyone watching this presentation adheres to all disclaimers on wave5trade.com. Okay, so Elliott Wave Theory is a common sense method of measuring trends and corrections. Okay, why? Okay, so I'm going to talk about stocks because I've been a stocks trader for a long time, but this works just as well for forex, futures, and everything like that. But I just want to talk about why we want to measure these things. So individual stocks are in their own earnings and news cycles. You know, forex pairs are also in their own cycles, but are a little more closely linked. But again, react to major news cycles. Futures are linked to indexes and commodities, also follow closely to news and event cycles. So you can see this pattern starting to form already, where these news cycles start to influence the direction of markets. And the herd mentality of traders and their reactions form patterns of movement and momentum within these cycles. So the need to label and represent this pattern in a meaningful way, respecting the same rules is required. That's what we want to do so we can understand mainly what's happening there. So let's talk about the trend rules, the things that we can't break if we are measuring a trend using Elliott waves. So rule 1, wave 2 must not retrace further than the origin of wave 1. So as we can see on the slide here, the origin of wave 1 starts at the little red dotted line. We go up, it pulls back, and the wave 2 is formed before it goes back up on the bullish trend in this case. So that wave 2 has not retraced further than the origin of wave 1. That is a basic rule and it must be followed, and it's one of the rules that's been programmed into this indicator sweep, and that's just the start of a potential trade. So rule 2, the wave 3 is always the longest impulse wave. So you can see we've got the Elliott wave sequence there, 1, 2, 3, 4, 5. But you can see now the third wave is always the longest. And it's great if we can get on one of those trades, but they're very, very difficult to trade from the outset because you just don't know when it's going to end. And one of the things why we trade the fifth wave is, although it's not the sexiest and it's not the longest impulse leg, it's the most predictable because everything else has happened before it. And one of these rules, rule 2, wave 3, has happened. That longest impulse wave has happened, the wave 3. Wave 4 must not pull back beyond wave 1 extreme. This is rule number 3. So again, I'm just keeping it simple. Simple rules which build up the programming for this indicator suite. So as you can see there, we've got the wave 1, the wave 2's pulled back. It's not pulled back past the origin of wave 1. Wave 3 is the longest wave. And the wave 4 has pulled back but hasn't pulled back past the origin, the wave 1 extreme, and then gone on and made a new fifth wave. So that's another rule. Those 3 rules are important and cannot be broken and form the basis of this indicator suite that we're talking about today. So observations, okay, so these rules have been placed in there to get the basics in to count the waves, okay, and because you've got to start somewhere. So let's talk about the observations. So observation 1, If wave 2 is simple, then wave 4 is most likely to be more complicated and vice versa. So let's have a look at what that looks like. So this is not a rule, it's an observation. It's something that makes you feel more comfortable that, that something is happening that happens 80 to 85% of the time. So as you can see on this, the wave 2 pullback has been simple. The fourth wave is complex. So initially it's pulled down, it's pulled back up a little bit, failed on a little wave 5, and then come back down and made a new lower wave 4. So that's what's called a complex wave 4. And then obviously we've had that simple wave 2. And then that works the other way around as well. If you get a complex wave 2, usually you get a simple wave 4. So it's just one observation to have in your mind when you're looking at these types of patterns. Observation 2. Wave 1 and wave 5 tend to be the same size. Now this is used as part of the programming for our automated target zones for the fifth wave. Not the only thing, but it's one of the observations that we look at there. So as you can see on this particular chart here, you can see from this C wave down at the bottom, on the bottom left, the green arrow forms the wave 1. You've got a simple wave 2, you've got a complex wave 4, and the fifth wave is pretty much the same size as wave 1. And that's a typical 5-wave move, if you like. Nothing's ever pretty, you know, everything looks nice and pretty. There's always pullbacks, range-bound periods, that sort of thing. But overall, the rules have been kept. The wave 2's not pulled back past the origin of wave 1. The third wave is the longest wave. Wave 4 is not gone past the extreme of wave 1. And in this case here, the observation of a simple wave 2 and a complex wave 4 helps to start to build that pattern there. Okay, so observation 3. When swing trading, the wave 4 pullback has 3 zones that give probabilities of a new wave 5 high being formed. Now these are pre-programmed, these are automatic in this indicator suite. Okay, so the first zone, the green zone, if the wave 4 finds support on this bullish move here, then and starts to move away from there, there's an 85% probability it's going to go on and make a new wave 5 high. If it pulls back into the amber zone, finds support, starts to move back away in the direction of the main trend, then there's an 80% probability it's going to go on and make a new wave 5 high. The red zone, 75% probability. Anything below the red zone, you're rolling the dice a little bit there, okay? The probability gets a little bit too low. The wave 4 pullback's been too deep, and the chance of it going on and breaking that wave 3 high becomes too low, and it's not a high probability trade. Okay, so observation 4. When swing trading, the wave 4 pulls back between the 90% and the 140% of the highest point of wave 3 on a 535 oscillator. Okay, now we will go through this on examples on the chart. So in essence, we've got an oscillator here. What is the oscillator? It's a 535, forget the 3, don't know why that's happened there. Basically, that's a cross-section area picture of the 5 and the 35-day moving average. So as you can imagine, those moving averages on a chart, they move apart and come closer together again. So what you can see on the wave 4 pullback between the 0.9 and the 1.4 there, you see that crown. Now that's the wave 4 pullback. You cross the 0 line from the wave 3, pulls back and crowns between the 90 and the 140%. And again, the 535 oscillator is part of the indicator suite, and we will go through some examples using that as well. Okay, trend failure. So we've talked about some of the rules that make up these basics of Elliott Wave to measure, okay? But if they fail, the trend has failed. So what are the two instances that I've just discussed that present trend failure? Can anybody tell me? We went through those basic rules. Who was listening? Yeah, well done, Jim. Wave 2 retraces below the base. Good. Yeah, you've all got that one. Peter, well done. Steve, Jim. Wave 4 retraces below the wave 1 extreme. Very important for that trend failure. That indicates that trend is really over and we could be into a correction phase. Yes, that's correct as well, Robert. Well done. Wave 3, not the longest. But when that rule breaks, you usually find when we've traded the fifth wave, if it goes beyond the target and it goes longer than the original wave 3, the software or the indicator suite will reprint it as a new wave 3, and you're on a run then, because you know that fifth wave has gone longer than the third wave. It's been reprinted as a third wave, and it's a big trade. Yes, expanded wave 5. And that happens, you know, that happens 60 to 70% of the time. And what turns out to be a great trade, it turns out to be a monster trade because you've got in at the right time. It's just about managing it then and expecting a pullback. It's very good when that happens as well. It feels good. Yes, wave 3 has to be longer than wave 1 or wave 5, but what happens is, at the time of your trade, and we'll go through some examples, you've got the longest wave is the wave 3. It pulls back on a wave 4, and you're trading the fifth wave. But then the fifth wave continues, and actually sometimes it ends up going longer than the original wave 3. So everything's reprinted and reassigned. Barry, and that does happen sometimes. Okay. So if a trend does fail, we are in a corrective phase, and I'm not going to talk about trading corrections today because that's a whole new subject and a whole new sort of strategy of trading. Robert. Yeah, I mean, we are looking for that momentum to carry, and the wave 4 is a sustained profit-taking move usually, because we've had that, you know, we've had that long bullish move, and people are starting to take profit, and the prices are starting to go down, and that wave 4, what I call, and what a lot of people call, a profit-taking pullback, and that's what a wave 4 is. Yeah. Okay, so are there any questions so far what we talked about? Again, Elliott Wave Theory can be very complicated, but it doesn't need to be. If you stick to some basic rules and I put those basic rules into this indicator suite, and the boot camp that comes along with this, a 4-hour training boot camp that is pre-recorded, but it was recorded live, goes through all of that, entry strategies, and uses lots and lots of examples. So are there any questions so far? Yeah, the start is always difficult with an Elliott wave move, Robert. But again, if you're going to just trade the fifth wave, it's gone through all of those rules and it's met all of those observations. So you feel more confident on that fifth wave. So the ending should be a little easier. It's very difficult to get it on the start. Those trend reversal trades are prone to fail and go into corrections. But once it's gone through the 1, 2, the 3, the 4, it becomes a lot easier. So if it goes sideways in the leg, Stephen, depending on the time frame which you're trading off, you could always start your wave count again once it breaks that that sideways move. So we can look at that as well, because that's a good point, because this indicator suite allows us to isolate the start of the wave count, and a little bit of chart and tradecraft doesn't hurt you with this instance, because if you get a long range bound period, that's not a trend. So then once it breaks out of that range bound period, that's the start of a new trend, and then you can isolate the start of that wave count from that point. So we'll try and look for some examples of that. It varies, JK. The ABC correction really does vary. But again, we're not interested in trading that first, second, third wave. We're trading, the highest probability is to try and find those fifth wave trades. So the indicator suite does all of that labeling for you. Yeah, it depends, Peter. It does depend on the time frame that you use. Again, I trade stocks off a daily time frame, because a daily time frame is a whole trading session. It has an open, a close, a high, and a low, and you can't get more purer than that. And then when you put a lot of those daily candles together, you see a trend, and you measure that trend with the indicator suite. That's the purest form, but it works just as well on a 60-minute time frame, on a 5-minute time frame. It works on futures, on forex. So yeah, we can go through examples of those as well. Yes, wave 4 is always a fib retracement of wave 3. That's how our target zones are measured, Raymond. Okay, and the specific fib retracement levels that we use for those. Robert, yes, news can confuse the counts, but I used to trade FX a lot, and what you need to do is look at FX on, for me, was probably 4 time frames. I would look at it on a daily, a weekly, a daily, a 60, and either trade off the 5 or the 15. And understanding where we are on the wave counts on those time frames for a specific forex pair makes it easier for you to trade and look for those trading opportunities. Okay. Okay, so let's get to. Okay, so let's go through the discount first. Okay, for the webinar attendees. Now, the exclusive 20% discount, scrap that, it's Christmas, 25% discount. It's only going to be $300, and I'm going to change that live right now in a minute. It's usually $399. What you get is you get the Elliott Wave count, automatic, Elliott Wave isolation, high probability pullback zones, a special 535 oscillator, 6-4 moving average high and lows for trade entry and management, 4-hour boot camp to learn how to use the Elliott Wave indicator suite and teach you a top swing trading strategy for using this indicator suite. Email support, and then starting in January, monthly live support webinars where you come on with me and we look at everything, stocks, futures, forex, and we spend an hour support, answering your questions, helping you understand if you're having problems isolating wave counts, that sort of thing. And it works, and you will get that support. Okay, so what I want to do now is I want to share the screen. Let me just go across there. I'm going to bring over the this is the order form here on the sales page. You can see it's $399 right now. I'm going to put that link, excuse me, the link is in the chat. So what I'm going to do now, I hope this works, I'm going to go to the product and I'm going to edit that from $399, and again, it's not 20%, I'm giving it 25% off. I'm going to change that to $300, and this will be live while I'm still doing all of this. Once I close this down, the webinar finishes, it will go back to $399. So I've changed that to $300, update product, give that a minute or so, and then that will be at $300 from $399. So that's done. So hopefully now you can see the charts. This is a short that that triggered yesterday, and I just want to yes, Robert, I'm ex-military. I was an engineering manager in the British Army for 17 years. Yep. So I was in charge mainly on heavy armour. So I was in charge of all the engineers that looked after the electronics, the automotive, everything like that. Good question, Barkat. We can go through that right now, and I'll show you. So no, it's one-off payment, Emmanuel. And all the new versions that come out, it's all free. Okay, it's lifetime. You're going to get this for $300 instead of $400, and it's lifetime. You've got it forever. And when new versions come out next year, we add more to it. The upgrades will be free. Okay. So let's talk about HBI. This is a stock, daily time frame. We start at the top. This is the end of a sort of bullish move. Right at the top, I've isolated the wave count, and we've got a wave 1, a wave 2, wave 3, wave 4's pulled back into our red zone. It's found resistance and then moved down. So to answer your question, Barrett, if you see here, this is quite a simple wave 2. We've got a complex wave 4. Now the 6-4 moving average low, this red moving average, is a special moving average. They help us identify entry strategies. Okay? So let's see. With this, we got the wave 4 pulled back into here. We got this little dip down, did not break the 6-4 moving average low, pulled back up and made a new wave 4 high. So this is a complex wave 4, but it didn't break the 6-4 moving average low. Okay, we know it's got the wave 4 once we start to move away there and breaks through the 6-4 moving average low here. Now for me, the entry strategy, I didn't enter as soon as it broke because I had this, on this complex wave 4 here, I had this little dip. So I wanted to make sure that this first rejection on the wave 4, my entry was past that, okay? And this is some of the entry strategies that we talked about in the boot camp. So this was the entry yesterday, and this is where we are today, and this is the automatic target zone. You see the 535 oscillator down at the bottom. This is the highest point of the oscillator on the wave 3, and then the wave 4 has pulled back between 90 and 140% of the highest point here and crowned. So everything sets up really well. The wave 4's pulled back into that pullback zone. It's moved away. It's come below the 6-4 moving average low. I've got the stochastic crossing over. Gone through the 6-4 moving average low. I've decided on a more conservative strategy to make sure I'm below these lows of this complex wave 4 bearish move here, and I'm in the trade. Automatic target zone for you as well, so you can work out your risk to reward between stop loss. Your stop's going to be just above the high of the wave 4 there. Okay. Okay, this works. Okay, Robert, ex-Royal Navy, CPO helicopter engineer, yeah. And you're into trading, that's brilliant. I think ex-military make very good traders because we're very disciplined, and that's a lot of the, sometimes that's a lot of the issues with traders. So this is just one example. Let's go down to VTR. This was a short. I've taken profit on this today now. So let's zoom in on this one a little bit. Wave 3, Wave 4 entry, I entered coming out of here. It pulled back, didn't take out my stop loss because the Wave 4 stop loss is all the way up here. And then the last 3 days is just absolutely plummeted to the target zone. And the guys in the trade room and everything like that that I run, very, very happy. This is a 2% profit on the account balance. And they've stuck with me because we've got the Wave 4, we've had the entry, it's pulled back, it's come down again, it's pulled back, but each time we've not broken the stop loss because, you know, this is how it works. And we've just had that big move in today. So very, very big move. You see the 535 oscillator down here, crowned right at the 140, but stayed in the limits. Fantastic. So BP is another one. This is a long that we're in. Again, we're at the lows from here. Little simple wave 2. I mean, it wasn't a complex wave 4, but it was just a bit longer. BP is quite a gappy stock. But it did find support in the green zone. Okay. Now, one of the things I've left off here is the measurement of 535 because that's not automatic. You have to do it yourself. There's one thing you have to do yourself, and let's measure that. So let's do that now. And again, I teach you how to do this in the boot camp. So we get the fib extension. We go to the highest point in the wave 3. We go to the 0 point, we go back to the highest point in the wave 3, and then and I'll show you how to do this in the boot camp, is to just set a template, load a template, oscillator pullback, load, apply, job's done. Okay, really simple, between 90 and 140%, wave 4 pound support. We entered coming out of the 6-4 moving average high, pulled back, higher support level, and then we're going off towards the target level now. Yes, Barcat, the stochastic does play a role, and that's included in the boot camp that comes with this indicator suite. So what we're looking for is a wave 4 pulls back into our pullback zone, the oscillator crowns here, and the stochastic crosses over in the oversold zone. Okay. So we've got 1, 2, 3 really big things helping us make a decision that wave 4 has found good support in this case. The stochastic started to move away, the oscillators crowned, the price action started to move away from the wave 4. We've gone conservative on the entry outside of the 6-4 moving average high, and this is where we are right now. Okay. Let's just go for one more TD. That's triggered today. Let's just zoom in a little bit here. So wave 3, wave 4's pulled back into the green zone. Let's measure that again just very, very quickly. Fib extension, highest point in the wave 3, 0 line, back to that point. And let's just load up the template. And again, I teach you how to do this in the boot camp. And there you can see the 535s within the 90, 140 stochastics crossed in the oversold zone. Wave 4's pulled back into the green zone. We've come outside of the 6-4 moving average high, and we're in the trade. It's that simple. Yes, Barry, it's being recorded. Right. Your NinjaTrader ND8 platform, it will work. It runs off the NinjaTrader NT8 platform, Emmanuel. Okay. Right. Does anybody want me to look at some stocks or some futures or Forex? You know, throw something at me. Let's have a look. Because I didn't want to prepare too much. No, it won't work on NT7, James. We had to make a decision, and NT8 is the future. Wow. Okay, we've got a lot on there. So let's start with WHR. So let's just put WHR in there, and then I'll do a couple of stocks, and then I'll go to gold, and then obviously some of the Forex as well. So let's have a look at this, where we are with WHR right at the moment. So I just want to zoom out a little bit. Okay, we've got a high there, so I'm going to click there, press F5, and as you can see, we've got these gaps. Not very good on this stock. Got an ABC correction. That's really, and then we've got this down 1, 2 there. With WHR at the moment, Ron, it's not a great picture. There's no fifth wave trade there at the moment, to be honest. It's very corrective. We've come down, we've broken some rules. This high's come back up and broken this previous wave 1. So where the A is, that was a 1. That was a 2. That was a 3. But then when we've pulled back up, you see the high there? It's broken that previous wave 1. It's broken the rules. So the software has discounted that and labeled it a correction. And now where we are, we've started the low, we've got a wave 1, we've got a 2, and that's where we are again. Okay? No, it doesn't plot subwaves, JK. Remember, I want to keep this simple. Trading the fifth wave. That's all we need to do, and that's all I made my money from, and this is all I continue to do with my trade room, with NTV Pro, everything like that, just trading that fifth wave. As long as you can keep doing that, all these subwaves and everything just overcomplicate and start to make you rethink and question yourself and all that sort of thing, and it's not helpful. The thing to do is keep it simple. 1, 2, 3, 4, hit all the rules. 535, stochastic, pullback zone, through the 6-4 moving average, got the target zone, enter. So WHR, right, so let's just go for Tesla, and then I'll go through futures, some of the futures you've put up there. Yes, it works with 5 minutes or 1,000 tick. We can look at some of those as well. So let's just do Tesla. Now Tesla on the daily isn't brilliant, but I know on the weekly, because I'm trading that, let's just put that on there right now. I'm going to go for a low there. This is where we are on the weekly right now. Okay, so isolated the Elliott wave count from this low here. Okay, this is a range bound period. Yeah, it's a roller coaster. It's going sideways. Then we get this low. Then we get a wave 1, a wave 2, and then this long wave 3 on the weekly. We've hit the wave. We've come down, hit initial target level, come back down. We've found really good support now. Now I'm in this. This is a longer term investment. Now, why didn't I go in the first time? Look at the 535 oscillator. The first time it came into this pullback zone, look where the oscillator is. It's nowhere. It's not pulled back enough. Remember, it's got to be between 90 and 140%. So this was a false wave 4 because the oscillator is still high. It comes back up again, doesn't quite reach this wave 3 high, and then comes back down. Now the oscillator is crowning, so that's the point where we say that's the wave 4. We need to trade the fifth wave. So this is on the weekly time frame. So let me just put that in just to show you. So highest point on the wave 3, 0 line, back up there. And again, it's the stochastic. So it's building the picture of all together. And the 4-hour boot camp helps you do that. Let me just put that template oscillator pullback. Okay, as you can see on the weekly now, at this point when it came down here and started to move away again, the stochastic wasn't in the oversold zone. The oscillator was nowhere between the 90 and 140. So that was false. Came back down. Came up, sorry, came back down, found support, and it found support with the stochastic in the oversold zone. It's crossed over. The oscillators has crowned. We've got the entry. There's the target. Okay, so that's Tesla. Right, so let's have a look. Now I've got to go back on the chat a little bit here and go through in order where I can. CL, there we go, CL. Okay, so this is CL on the 15-minute. Okay, just go back in a little bit of time. This is how CL has behaved on the 15-minute, and in the last week or so we've had two really good trades. Okay, from this low here we've had the wave 4, it's come back up, it's gone sideways, but it's hit the target and gone through. Then we've had an ABC correction, and then we've had another big move, deep wave 4 though on there. Okay, deep wave 4, that was the entry, it's hit the target recently. Okay, so Raymond, do you think it works on CL? Works very, very well. Okay, they're the automatic target zones. Somebody asked for gold. So this is where we are on gold at the moment. Let me just go to the daily. Let's work through gold a little bit actually, because I like trading gold. Okay, so this is where we are on gold at the moment. We need to isolate at the top here. And as we can see, it's actually gone beyond the fifth wave on this short term, really, trend, downward trend. So from this high here, as you can tell, I do a bit of work on gold. We've had a 1, 2, 3, 4's come back into the red zone, and then we've gone down. We entered, got to ride the pullback during there, didn't break the stop loss because it's above the wave 4, and then it's gone and just rocketed down, gone through the target zone. Right, you could okay, you can set and isolate it anywhere. So this is gold on the daily. Okay, so let's look at this. We've got sideways action here. We've got a low here. We've got a little trend. Even if we isolate here, it just shows you that's where we are right now. And then we've come back down, and this is where we are again as well. So you can isolate anywhere and get that bar count. So if we now go down to the 60 minutes, okay, now at the moment that's a 60-minute chart. If I go onto the data series, I can go back 30 days on a 60-minute chart. Okay, and then what I want to do, this high here, I've had an ABC correction, a 1, a 2, a 3, and an extremely complex wave 4. Again, it's still a wave 4 at the moment because we haven't broken this wave 1 extreme. If it's just started to print the target zone very, very faintly there, okay? But if you wanted to then think, what can I trade this trend here? So let's go down to the 15 minutes. And let's have a look if there was a trade on that trend. So, okay, yes, there was on a 15-minute. Great trade there on gold. Okay, this is where we are right now. That pulled back below the wave 4, so that's the start of a wave count. And this is where we are right now on the 15-minute on gold. So you're looking at the patterns and you're looking for highs and lows and sideways action to start your wave count, no matter what time frame you're on, okay? And it works live as well as things are working. So we can look at SPY. Okay, what time frame we're on at the moment? The daily. Obviously we're near these highs, so we're looking for a pullback. It's nowhere near. So we want to go down. Let's go 5 minutes on SPY, and let's then go out a little bit. So we've got each day, and if you want to, I mean, to be honest, that's the low there from a couple of days ago, and it's quite corrective at the moment. If you're starting at the beginning of the day there, on the 5 minute, you've got the gap up. This was today. On the 5 minute on SPY, got the gap up, which formed the wave one from the low of the previous last 5 minutes from yesterday. That formed the 1, the 2, the 3, the 4 pulled back, found support, broke up through the 6-4 moving average high. So they're the MAs, JK. The blue is the 6-4 moving average high, which is part of the indicator suite. So that takes the average of the last 6 bars highs and skews it over to the right by 4 days. It offsets it. So it's your entry strategy and trailing stop strategy. So today on the 5 minute on SPY, there was a 5th wave trade. Okay, and the entry would be just coming out of this range bound period. It's hit the green zone. Boom. Okay, bear with me a minute. Let me just check that. I tell you what, go through to the sales page, James, and then press buy now. That's the link there. Yeah, I've just gone through there and it says $300. Look, there it is. So go through to the sales page, click buy now, and then that will take you through to this page to get it at $300. Okay. So that's SPY. Okay, so this is where we are on Euro US dollar. This is on the daily time frame at the moment. So you can see back from March, we started this bullish move by the 1, the 2, a simple wave 2, a common target. Again, you can get out of these trades. Use the 6-4 moving average low, the red moving average. So I'm going to just move that down. So the entry for this, because we got the oscillator pull back down here, would have been at this point where my cursor is now. You'd have made that trade. If it pulls back beyond the 6-4 moving average low, you can use that as a trailing stop as well. So good profit taken there on the daily. And then when it comes back up above, you can go again. But some people will, for me, I leave it. That's my stop loss. That's my entry. I'll either put a trailing stop on or I'll just let it play out because we're getting this nice support level in here right now. If we could put that support level in here, that seems to be pretty good, and that's above our entry. So that just below this support level, for me as a trader, I would have my trailing stop, making that a risk-free trade on the longer term trade on Euro US dollar. So let's go down to time frames where people trade. So what sort of time frame on Euro US dollar do you trade, guys? Anybody? Let's have a look. Yeah, this is the daily. Again, I'd have been long already. 30 minutes. Let's have a look at 30 minutes. There we go. Okay, so let's have a look at 30 minutes. Let's go out a little bit. Let's look for where we need a better data series than that. We need 30 days. See where we are. That's where we are on the 30 minute. So again, on the 30 minute here, we've had this low, a 1, a 2, a 3, the 4's come back into the green zone, and we're looking for an entry right now. let's just go down and check on the oscillator. Let's measure it. Fib extension. Highest point in the wave 3 is there. I think it's high. Is that higher? I think that's the highest point there. We go down to 0. And we bring it back up. Again, I will remind you, I do go through this in the 4-hour training bootcamp that you get with this. So that's where it is. Okay, so as you can see on the 30-minute Euro US dollar, we've had this wave 3. The wave 4's pulled back and found support in this green zone. The oscillator has come back and created a bootcamp. Yes, the 4-hour, Juliet, the 4-hour training bootcamp uses the NinjaTrader platform. And then every month I do a webinar and we use the NinjaTrader platform. Okay, so when you've got questions on how to do a fib extension, I show you in the bootcamp on how to build a template for that 90 to 140%. Everything else is pretty straightforward. It's a really good trading platform, to be honest. I mean, we do this indicator suite for other platforms, but this is the easiest to use. And yes, as Ryan says, they do NinjaTrader training sessions daily. But again, Euro US dollar on the 30-minute, you've got to think about now, it's had the wave 4, it's pulling away. Where's your entry? That's where your target's going to be, so you've got to think about your stop loss and entry. Daniel, the boot camp is pre-recorded. I recorded the boot camp live when I first brought this NinjaTrader indicator suite out. So it was live, it was people that bought and purchased it originally with all their questions. I go through all the theory, the strategy, the entry strategies, use loads of examples. It's pre-recorded. So what you do is when you buy it, you get an automatic email that asks with the code. It asks for your machine ID so you can get the lifetime license, and you get an automatic email with the 2 videos on for the training as well. So it's all automatic. Right. And that's, so we've done, I'm just trying to think if anybody wants to look, does anybody trade futures on tick timeframes? Usually I get questions about that. Okay, Ron, so what do we look? NQ, ES, CL. Okay, so let's go for CL. And what do you trade off? 500 tick. 133, okay. Right, let me just put 100 in there, then change it to 133. I can't. Can I change it to 1? I don't think I can. Close enough, 100. Okay, we're at 100 tick here. So let's just pull that out. Let's see where we are right now. Okay, so we want to get the low. Click, press F5. So this was the low. So I take it this is today. 934 we got the low, started to move away. We got the 1, the 2, the 3, the 4. Wave 4 pulled back into the green zone and started to move away. You enter and it bang on the target zone. So it does work, honestly, it really does. And you might get one of those trades a day. You're not going to get loads, but it's about identifying the low, okay? And that's pretty simple right here. So once you've got the low of the day and it starts to move away, you isolate the bar count and you just let the software count the waves. As soon as you get that wave through and it pulls back against it, it'll put the pullback zones in. You measure your 6-4 moving average, your 535 oscillator, and then you look for your entry. And your entry, let's zoom in. Your entry, for me personally, I'm a conservative trader. My entry is just above that level there, okay? Because I'm quite a conservative trader. You can, in reality, go just above there. So when we've got these initial attempts to move out this 6-4 moving average high, the blue one, let's make that a bit thicker. So I'll leave that for now. Yes, they are live barcats, so they do work as data comes through, so they will change. So again, today, or this day here, today, we came down, we found the low. So all we do, once we've, at this point in time at 9:34, we've on these lows. We don't know if that's a low yet, but once it starts to move, let's just go through the thought process here. Once we've gone past this pivot here, where my cursor is, we could say it's moving away from those lows. It pulls back down, but gets a higher support level than those lows, and then breaks that line again. So for me, it's quite simple. Click on that low, press F5, starts your wave count. And then as you're printing new ticks, the wave count, the software works automatically. As soon as it starts to pull back a certain percentage from that wave 3 high, these pullback zones are automatically printed and your target zone. No problem. So somebody wanted me to look at ZB. ZB. Francis, what sort of tick chart? What time frame? JK, you can do it 6 days, 10 to 13 days, 30 days, doesn't really matter. 1 minute, wow, okay. So we've got 1 minute on ZB. Yeah. Let's zoom out a bit to see where we've been today. Is that 1 minute? Yeah. Okay, so we've got the lows here. Press F5. Was there any trades today? No. So it's quite corrective today. I want to go back in time a little bit. Just go to the data series. Let's go back 10 days. Okay. There, we've got it. We've got it now. The data wasn't coming through properly, but it is now. So this is how the 1 minute chart has performed, okay? Because it's just basically started right at the beginning of those 10 days. So as you can see now, wave 4 hit the 5th wave, went higher. Wow, okay, it happens. At the moment, we've had that wave 3, wave 4's just formed and the target's formed. And that's where we are with that. 5 minutes, let's have a look on the 5. That, where we are, I've gone from the high, not a problem, that's the wave count. So longer term on the 5 minute, over days, this is where we are. If you want to see where we are today, we've got these lows click there, press F5. So this has been today. You know, let's forget about the bigger picture. What's happened today? And this, you know, if you had this indicator suite here, we got the open for today. It's been pretty rangy. We've got a 1, got a 2 posted because it didn't go below the origin of wave 1. Got a wave 3, got a wave 4, hit the wave 5, gone a bit beyond. That's fine. Okay, does that help, Francis, on the 5-minute for ZB? So you know, you can start your wave count beginning of the day, look for those lows. To be honest, that's quite rangy. You get the 1, the 2, and you just look for that. I mean, that's a double bottom. That's where you want to isolate the bar count for today and see where you go. And you get the 1, the 2, the 3. The 3's longer than the 1 or the 2. Wave 4 pulls back. Look for the entry. Go long. It has to be that simple. You don't want to make it complicated. Right, so let's go back to stocks for a second. Let's just move that out. Let's click on stocks. I did see GE. Let's go for GE. I think I traded this recently. It was GD. I think it was GD, sorry. Okay, so let's go to the daily on GE. Let's just check the data series here. Yeah, that's fine. Okay, so long bearish move here. We go back a year. We've got range bound there. With range, we're pretty close. I'm just going to isolate that there. Again, to help you when you're isolating at the moment, this is a really strong bearish trend. So, you know, we are literally I mean, was that a really good wave 4? Probably not, because the oscillator didn't back us up. And for now, one of the things you need to understand as well with a wave 4 pullback, it needs to be around about 6 to 7 bars. It can go longer if it's complex, but if it's very short, 2 or 3 days, it's false. Okay, and there's no breaks. This level here, we can say these were the lows, and there's a potential trend forming there upwards. Okay, so then we isolate the bar count and we just allow that. We just check it every day and see where it goes. Francis, we had to spend our money on the future for NinjaTrader, and NinjaTrader NT8 is the future. I don't know how long NT7 is going to exist, but we you know, NinjaTrader 7 has been replaced by NinjaTrader 8, NT8. This is the NT8 platform, and to be honest, we've got it for TradeStation and Thinkorswim as well, but the NT8 platform is the easiest platform out of those three that I've used, I must admit. And again, you can use the same data you've got for NT8. So I presume, I may be wrong, Ryan, but if someone's already got data for NinjaTrader NT7, they can get the NT8 platform for free. They can use that same data for NT8. I'm sure that's correct. And have this on there. Yeah. And the platform's free. So yeah, get Ryan to do it. You know, get the indicator suite, and it'll work. It'll work with the data. Yes, works in real time. Works in real time, absolutely. On the 1 minute charts or whatever, it just works real time. And it does, whether it's stocks, forex, futures, it hits targets. It really does. I didn't see any more stocks in there. Just checking, going through. There's quite a lot in that chat, so it's hard to try and get every single one. SORL was one. Let's go to the GE one. Oh, that's where we are right now. Okay, whoever was looking for SORL. So we've got these lows here. 1, 2, 3, 4. It's not a fantastic trade. You should be in it already. There's the target around about $9. Should be in it already. Should have been in at just over $7. That your entry should have been here, coming through here. That's your entry, and stop loss was just below the wave 4. So you got about a 1 to 1.6 into the target zone there. You got in at 666. That was aggressive. Yeah, target $9. Spot on. 666 was very aggressive, Carl. Yeah, target 9. No, you can't set an alert yet, Peter. But what we're going to be doing in the new year, we develop, because we do it over lots of different platforms, this indicator suite. What we're going to do for stocks initially is do a scanner on wave5trade.com, which will put those out on weekly, daily and 60-minute time frames. So it will give you lots of tickers that are setting up on those wave 4s. It would cost an absolute fortune to try and build scanners for each of the platforms: TradeStation, Thinkorswim, NinjaTrader, Multicharts, NT4. So what we decided to do is do a standalone one and put it on wave5trade.com, and it'll cost people something like $120 a year, something like that. We're not going to do futures straight away because people trade off 5-minute, 300 tick, 500 tick, range 1. There's so many different things to do. We've got to sort of take a poll over the next few months to figure out how we're going to build a scanner for futures, Francis, because there's just so many different permutations. With stocks, it's easier because we can set the scanner to run on a weekly, a daily, and a 60-minute time frame, and look for those criteria. It's at the 1, the 2, the 3, the 4, and it's pulled back into the pullback zone, the oscillators crossed, and the stochastic crossed. So we can filter those out. JK, best time frame for what? Stocks, futures, what? Stocks, right, okay. For me personally, I swing trade off a daily time frame, okay? So let's take VTR or PPG, doesn't matter, LQ, BP, doesn't matter. The purest type of swing trade to swing trade that fifth wave is off a daily time frame. And you've got to accumulate those, and obviously they don't hit, you don't get profits every day. But I took 3.75% profit on my account balance today on 2 trades, fifth wave trades. I took profit on, what was it now, VTR on the short and COP on the long. But it's like a sales funnel with these trading these swing trades off a daily time frame. They're all these stocks are in their own cycles, and they're all coming in at different times. So you're starting those trades at different times. Once you build up that momentum and that funnel of those trades coming through, you'll get trades closed. You might get 9 one month, you might get 13 the next month, but they'll all keep coming through. So this is just a prime example. Every single candle is a day. A day has an open, a close, a high and a low. You put all of those together, they form a really good solid pattern of how that stock is trending, because each candle is a whole session. And it's just that simple. And it works very, very well. With futures, it works. You know, for me, I know a lot of futures traders that use this, and you're gonna mix longer term trades, and this is the same with Forex as well. So if we just quickly, let me just move away from that one. I need to bring a different workspace in. So whether it's futures or Forex, it doesn't really matter. So let's just go for Euro US dollar, okay? And I want to go to the daily. So for me, when I used to trade Forex, I would be looking at having different types of trades on. So when I'd be trading Forex, I might be trading Euro US dollar on the daily. If I get a wave 4 pullback, I'm going to go long. So I'm going to have a stop loss here. I'm going to have an entry there, and I'm longer term on the daily time frame on this fifth wave, and that could take quite a while. Okay, so I'm trading euro, say this is for me, on a daily time frame. So I've got this trade on, but also then I'm going to look at GBP US dollar, and I'll be looking across 60 minutes. Whoops, that's not a 535 oscillator is very good on any time frame, JK, but works very well on the daily time frame for stocks as well. Stochastics 1433. That's the stochastic I use for everything with trading this fifth wave. Okay, what time we got here? So I've gone on a little bit too long. I do apologise. They're simple moving averages, yeah. No problem. So Ryan, let me just put the link in again. Again, I'll leave it open from the 10-15 minutes. Go to the sales page, click buy now, and there's 25% off. Whoa, hang on a minute. No problem, JK. No problem, Jim. Yeah. Again, people try and overcomplicate trading, and it's not complicated. If you keep it simple, keep the simple rules, and you've got an indicator suite that helps you keep to those simple rules, it works very well. Daniel, usually the recording goes out within, I think it's automated, it will come out within 24 hours. Do check your junk mail though, because you're not used to receiving an email from me. If you don't, my email is going in right now, paul@wave5trade.com. If you don't get the recordings within the next 24 hours, give me a ring, but they should be in there. Daniel, yes, yeah. Okay, so that's it for today, guys. I will hand it back over to Ryan. Thank you for coming today. It's 11:30 p.m. here, so I'm flying back to the UK tomorrow, and that's it for me now. So thank you for coming. You're welcome, Jim, and hopefully you get this indicator suite and we speak again on the January webinar. I live in Spain, Peter, but near Marbella, but I have a house in Sale, in South Manchester. Yeah, in Sale. Merry Christmas to you, Raymond, as well. So yeah, I'm back in England for 16 days, back to the cold. I was sitting in the sun today, getting a bit of vitamin D before I go back to gloomy Manchester. Okay, Ryan, do you want to close it up?
Alright, so this is Ryan back from the NinjaTrader ecosystem, and I'd like to give a special thank you to Paul Bratby of Wave5Trade for his great presentation today. The NinjaTrader ecosystem is pleased to sponsor our weekly vendor events as a value-added service for all of our clients, so if you find value in these events, we would hope that you would attend them on a regular basis. And we'd like to remind everybody in the room that the information provided today in this presentation was that of Wave5Trade and not that of the NinjaTrader group. All information presented was for educational purposes and should not be construed as trading advice. If you are curious about joining NinjaTrader training events throughout the week, you can look at our schedule that I posted into the room. We appreciate the time that you spend with us in our webinars. We hope you enjoy the rest of your day, and we hope to see you in our future webinars. And happy trading from all of us here at NinjaTrader.